Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Meitu Inc. Annual Report. Meitu Inc., an investment holding company, offers a diverse range of products and services that cater to various industries. At its core, the company provides AI-powered tools for photo, video, and design production. Its product portfolio includes mobile apps such as Meitu App, Wink, Design Kit, QIMI, Beautycam, Kaipai, Meitu Inc, and MOKI. In addition to its product offerings, Meitu also provides ecosystem products that support various industries. These include ZCOOL, a suite of education and design services, as well as RoboNeo, an AI-powered platform for the beauty industry. The company's smart hardware business offers innovative solutions for various sectors. Meitu services extend beyond product development to include online advertising and IVAS, Internet Video Advertising Services. Its portfolio of photo and community apps provides a platform for advertisers to reach their target audience. Furthermore, Meitu offers information technology services that support the growth of its ecosystem products. The company also operates the Meitu Imaging and Vision Lab, which focuses on research and development of AI-powered imaging technologies. This lab is dedicated to pushing the boundaries of innovation in the field of computer vision and artificial intelligence. With a strong presence in mainland China and international markets, Meitu Inc. has established itself as a leader in the technology industry. Meitu services also include Meitu PC version, Meitu AI Open Platform, Meitu Eve, Made, and Miracle Vision. These offerings demonstrate the company's commitment to providing comprehensive solutions for various industries. With its diverse range of products and services, Meitu has become a significant player in the global technology market. In summary, Meitu Inc.'s list of businesses and services includes AI-powered tools for photo, video, and design production, mobile apps such as Meitu App, Wink, Design Kit, QIMI, Beautycam, Kaipai, Meitu Inc, and MOKI ecosystem products including ZCOOL, Hello RF, ZCOOL Education, ZCOOL Design Service, and RoboNeo Smart Hardware Business, Online Advertising, and IVAS Services, Information Technology Services, Solutions for the Beauty Industry, the Meitu Imaging and Vision Lab, which focuses on research and development of AI-powered imaging technologies. Meitu Inc. maintains a market capitalization of $20 billion, broadly in line with the industry peer group. Meitu Inc. trades at a higher price-to-earnings ratio of 25 times, and a higher price-to-book ratio of 3.07 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 29% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 2.31%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth for the company can be attributed to several key factors. Firstly, the paying subscribers of productivity tools grew by a significant 67.4% year-over-year, contributing substantially to revenue growth. Additionally, the core business of photo, video, and design products experienced rapid growth at 41.6% YoY. The integration of AI agents across most product portfolios also drove billings growth since December 2025. Furthermore, improving monetization capability and operating leverage played a crucial role in driving revenue growth. The company's strategic focus on high-value industries with measurable productivity gains, as well as its globalization strategy, delivered accelerated growth in paying subscribers from markets outside of mainland China. The launch of AI-native platform RoboNeo in July 2025 also contributed to revenue growth. On the other hand, the primary drivers of revenue decline were limited. However, it is worth noting that IFRS net profit attributable to owners of the company decreased by 12.7% YoY due to a high base and one-off non-cash expense. Additionally, the discontinuation of cosmetic supply chain management services resulted in a significant decline of -90.6%. The net income attributable to owners of the company experienced a significant decline, decreasing by 12.7% year-over-year. However, when looking at adjusted net profit, there was a notable increase of 64.7% YoY. This discrepancy suggests that while the company's overall profitability may have decreased, its ability to generate profits after adjusting for certain items improved substantially. The gross margin also saw a decline, decreasing by 2.4 percentage points to 73.6%. This represents a drop from 76%, indicating that the company is losing some of its pricing power or efficiency in its production processes. The decrease in gross margin may be contributing to the overall decline in net income, despite the improvement in adjusted net profit. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. The data shows that the net cash generated from operating activities has increased substantially over the past year. In 2025, the company recorded an impressive RMB 1,257,010 in positive operating cash flow, representing a notable increase of RMB 511,203 compared to the previous year's figure of RMB 745,807. This upward trend suggests that the company is becoming more efficient in its operations and is better equipped to manage its finances, ultimately leading to improved profitability and sustainability. The company's debt level has experienced a significant increase, rising by 81.6% from RMB 2,014,115 to RMB 3,650,516 over the given period. This substantial growth is further supported by an increase in financing activities of $767,654 in 2025. However, there is no clear indication that interest expenses have changed significantly, as the annualized interest rate decreased from 2.46% to 2.8%, which may not be a notable change. The company's recent performance has been mixed, with some segments and regions excelling while others struggled. On a positive note, photo, video, and design products have seen a significant surge in growth, with a 41.6% year-over-year increase. This is also reflected in the international markets, which outpaced mainland China in paying subscriber growth. However, not all areas of the business have fared as well. The advertising segment has experienced flat performance, failing to show any significant improvement from the previous year. Furthermore, mainland China's paying subscriber growth was lower than that of international markets, indicating a need for improvement in this key region. Management's commitment to vertical-driven AI strategy. The company remains steadfast in its commitment to a vertical-driven AI application strategy, aiming to transform model capabilities into practical workflows through industry-specific AI agents. This approach focuses on high-value industries with measurable productivity gains and strategic expansion into global markets. As part of this strategy, the goal is to become a leading global player in the vertical-driven AI application market. To achieve this, management will closely monitor the progress of its proposed separate listing on the Hong Kong Stock Exchange, ensuring that it remains on track to meet its objectives. By prioritizing industries with significant productivity gains and expanding into new markets, the company is positioning itself for long-term success and growth. This commitment to a focused strategy demonstrates management's confidence in the company's ability to deliver value to customers and drive business results. The company has a history of paying out dividends to its shareholders. This is evident from multiple instances on page 20 and a clear confirmation on page 21 that it has indeed paid dividends. On the other hand, there is no record of the company buying back its own shares. The absence of any information on share buybacks on page 6 further supports this conclusion. That concludes the financial summary for Meitu Inc. Feel free to comment below, and I will be happy to answer them when possible.